Welcome traders, this is Vishal and you are watching weekly sectoral analysis. Currently we are looking at the Nifty Futures weekly time frame, and what we can see is in last 3 weeks I would like to pay attention to the price action of the last 3 weeks. Now this particular week we can see that the wick over here is pretty decent enough in comparison to the upper body, but although we cannot call it as a classical hammer candle. And what we can see over here is price is taking support from this particular trend line, which is holding on since almost 23rd of March 2020. And also this support band, horizontal support band, is holding on. So this is a pretty decent support band. The next candle which we have is inverted hammer. So generally after such a candle which is trying to show us that price is taking support, in case if you have a big green candle, then it reinforces the bullishness, the bullish sentiment in the market. But in the, despite of this candle, what we can see over here is this is a shooting star. So back-to-back candles which are completely opposite to each other. And again, the third week, now if you can see in the last week over here, this particular candle is almost like a hammer, almost, but I would like the upper wick over here to be slightly smaller. So it is looking like a hammer, but I can say that the market is confused. Market doesn't have any idea where it wants to go. The trend is also flat. If you can look at the RSI is also completely sideways, and price is also within the two moving averages. And yes, prices are taking support from this trend line. I'm not denying that, but just taking support is not going to help us. Price also needs to move higher, or else it needs to break the support and trend lower, because making money in a flat market, making money in a range bound market is next to impossible or extremely difficult. A stock specific, there are few trades here and there, but overall it is not a trendy market. And I generally call this type of market a kangaroo market. Kangaroo market, you know how kangaroo moves, they just go up and down, they keep on jumping. So same thing is happening over here. You can see prices are bouncing and then again facing resistance, coming down. This is a very, very strong hammer, I would say, extremely strong hammer. The length of its wick in comparison to the real body is very, very good. Then we have a big green candle. According to this entire candlestick formation, prices should have rallied, but instead there was one green day and suddenly we have a a red day in making. So basically overall markets are choppy until and unless I think 17,800 850 will not be taken. It is not going to be very easy, and even if we take this level out, we'll be possibly heading 200 to 300 points higher only. It's not going to be an extremely big rally. And on the downside, I would say the immediate support for the market will be somewhere at 17,200 levels. So if you close below 17,200, maybe for a day or maybe a bit more than that, then the next support level could be 16,950. Overall, markets are in a range, and traders should be extremely careful what they're trying to trade. They should know which particular sector is outperforming, which sector is underperforming. And in case if you're taking a long position, then just understand one thing: try to pick a stock which is the leader in that pack. Or if you're trying to short a particular stock on the downside, then try to sell a stock which is the weakest in that particular sector. All right. And as far as possible, trade less. This is not a time to have ample of trades in your trading portfolio. Bank Nifty, if you see in comparison to the Nifty, yes, it is relatively stronger. First, I would like to share what I feel after looking at the weekly time frame. In the weekly time frame, the trend is up, but the momentum is absolutely flat. You can see prices are flat, even RSI is flat. And even over here, if I take this candle, in fact, I would like to say seeing at all the last 5 candles, first one is an inverted hammer. Second one is also like an inverted hammer. Both are saying that there is some sort of selling pressure at higher levels. Then we have a high wave candle. So overall, if you see, the real body of all the last 3 or last 5 candles are very small in comparison to the wick which they are having. And till now, last 4 candles, I would say, generally, they were facing high selling pressure on the upside, except this candle. This is possibly due to some sort of, I think, freak trade which happened at the upside. But otherwise, this particular candle is also having a small real body. If I look at this candle, this is little bit different than all other candles. This is looking like a hammer, not exactly one. But yes, if this real body was slightly higher and the upper wick was smaller in comparison to the lower wick, then this would be a pretty good candle, because this candle is taking support from this trend line, which I have drawn upwards. Also, there is a horizontal support over here. And if you can see this particular hump over here, which is coming up, this is also providing support to this particular candle. And if I open the daily chart, you can see over here also we have a beautiful hammer, a very strong hammer in fact, and a bullish belt hold, and then sort of a spinning top, and then we have a gap down. And I think in my Nifty short-term view, in my previous Nifty short-term view, I had told that Bank Nifty is looking strong, but I don't think that Bank Nifty futures will inch higher in one way. I had clearly said that even if the trend is up and even if prices want to go up, they will go up like, one step up, one step down, again a step up, maybe a step down, again a couple of steps up. So the momentum will not be strong, but overall direction remains to be bullish. And obviously this entire band is still holding on as a strong support from 37,750 to 38,273. But within the banking space, also we need to understand whether the private banks are powerful or whether the whether the private banks are going to outperform or the PSU banks are going to outperform. Now, if I look at the private banks, overall chart is extremely similar to the banking space. And if you look at the PSU banks over here, we can see that the trend is up, but now I think it is a little bit overstretched. And I had also shared something on Twitter that the overall trend is still up. It is strong. I'm not denying that. But prices were hovering around important resistance, important trend line resistance. So I had clearly said that booking partial profits is a wise decision. And you can see prices trying to come down. In case if you have a short-term dip or consolidation, then traders should look to initiate swing trades in PSU banks. Not right now. I think it will take few days, but you can keep this in your mind. And in private banks, I think I have two outperformers. One is obviously the ICICI Bank. Yes, I know that the price is not inching higher. The trend is sideways, but overall the state of trend is powerful. I think we'll need to close above 818 to 820. Once this level is taken off, then I think we'll see firework on the upside. And one more stock which I have is Axis Bank. This is already outperforming. And buying at current levels makes no sense. I think we need a consolidation, maybe a correction, a short term, not a positional correction. Possibly after that, it will make a good swing buy. All right, let's check on two metals now. Okay, now metals have suddenly changed gears. Like if I look at a weekly chart now, metals are looking fine. But we need to also understand that you cannot just go and pick any stock in metals. You look at this particular stock. Is it looking strong? Absolutely not. So we have to be very, very precise in our stock picking. And one more thing which I can see is that metals are currently trading at a short-term Fibonacci extension. So if there is a maybe 1 or 2 days profit booking here and there, or maybe little bit consolidation for 2 to 3 days, I will not be surprised. But two stocks which I would like to concentrate on is one is Tata Steel, but we have a resistance band from 1290 to 1270, so you need to be careful. and one more is Jindal Steel and Power. Kindly analyze at your end. Kindly analyze it in your own proprietary trading system, and then you can go and look into it. Now, apart from banks, there is one more sector which is outperforming, and there is auto. If you look at the weekly chart, yes, I can understand that the last four candles have been spinning tops and prices are going nowhere. They are completely range bound. But in comparison to few other sectors, like say, I would say IT, auto is looking much better, because when markets are not good, even not coming down, even staying afloat, even just staying there, is also an outperformance. And you can see even with the price, RSI is also absolutely sideways. The trend is up in the weekly time frame. Absolutely. The trend is also up in the daily chart. We are also bouncing off from important supports. And the couple of stocks from my side, one is possibly Tata Motors. All right. Second one is Ashok Leyland. You can go to my YouTube channel. I had also made a detailed video of Ashok Leyland, how the stock will perform if it closes probably above 140, 142. You can just go to my YouTube channel and you can find out. So have a close watch on the stocks. All right. Now, finance pack. In the weekly time frame in the financial sector, you can see that the entire sector is consolidating. Last 3 weeks candle are spinning tops. So I think we'll need to wait and watch how things pan out. I think prices will need to close above this trend line. Once this trend line is surpassed on closing basis, maybe then I will be able to comment, because commenting before that makes no sense at all. Right? So let's wait patiently and see what happens. IT sector. Now, IT sector, from many days or weeks, I have been telling that IT is one of the weakest links in the market. Even the monthly time frame is weak. The weekly chart is also weak. The trend in the weekly chart is flat. And in the daily chart also, the trend is flat. Only thing is that this particular trend line is holding on. Once I think we close below this trend line, below this low, the correction could be even faster. And one stock, I think all of the stocks in IT are underperforming except one, which is TCS. But this is one stock which has still not underperformed drastically. The stock's name is HCL Tech. Once we close below 1160, then I think swing traders should concentrate on this particular stock. Pharma pack. Now, let's open up the weekly time frame in Pharma. You can clearly see in the RSI is sideways. So is the price. There has been a negative moving average crossover, and after a negative crossover, there is a hammer and a bullish bell toll at a support band, and this support band is coming up at a previous high. And monthly time frame, if you see, the trend is absolutely flat. In the monthly time frame, trend is absolutely flat, and in the daily time frame also, the trend is absolutely flat. So frankly speaking, I have nothing much to say on pharma. I would like to stay away from this particular sector. And let's jump on to the FMCG pack right now. In the FMCG pack, if you look at the daily chart, you won't find anything, making sense to you, because things are just going haywire. Things are just sideways. Nothing makes sense. Prices go up and suddenly they come down. When a big red candle is formed, suddenly small hammers come up. So you won't understand much what is happening. It won't make sense to you. But if you want to understand really what is happening in the market, you will need to concentrate on the weekly time frame. In the weekly time frame, it is very, very clear that prices did correct, and now prices are getting support from this particular small support band. You can see this hammer, you can see this bullish bell toll. Now this particular red candle I would like to ignore right now, because until and unless we don't close below the lows of this hammer, I cannot say that this particular pattern is nullified. Sorry, this particular pattern is nullified, but I would just ignore this candle. I would wait patiently probably. In case if prices start closing above this resistance band, which I've drawn over here, then something interesting could happen on the FMCG pack. But until and unless something happens, I don't want to comment anything. It makes no sense to, predict about the market. Now, reality pack is also in a very funny situation, my friends, because the reason is the trend is flat in the weekly chart. Prices are not ready to go up. You can see a inverted hammer over here, and they're also facing resistance from this, which was earlier a support band. Now it is sort of a short-term resistance band. Now, I had told in the last video also, the midpoint of this particular candle is going to act as a strong support, and even this is a 50% retracement. So one support is broken, and now again one more support is coming at the tip of these two candles, and over here also at the 50% retracement. But just by testing a retracement, just by testing a support, it doesn't mean that the entire sector will start going up. Until and unless we do not see it happening in the price, it makes no sense. So I would like to wait and watch and observe what happens in the next week, in the next few coming days. After that, we'll come to some conclusion. Consumption pack. A consumption pack is more or less like FMCG pack if you check properly. Only difference is in the FMCG pack, the support is a little bit more stronger. In consumption pack, the support is not that strong because the stronger support is somewhere in this zone. But nevertheless, even if the market has its own power, market has its own bullish sentiment, then market can pull off from any weaker support also. And you can see the trend is flat. We do have a hammer over here. This is not a bullish bell tool. Both these candles are spinning tops. But these two hammers will only make sense to me once we have a weekly closing above this particular resistance band, which is 7280. Until and unless this does not happen, I would not like to comment anything, because the trend currently in the in the daily time frame is down, and in the weekly time frame it is flat. And say for example, if there is a shorter term correction also, all right, if the prices fall from this particular level to this level, and the recent supports are very near, so as a trader it makes no sense to go and short a stock where the support is extremely near. All right, so we'll wait and we'll watch what happens. Mid caps, let's check the weekly time frame again. You can see the trend is flat. We have one big candle over here, which is a hammer. This is a strong hammer. This is also a strong hammer. Both of these hammers are coming from a similar support band, and after this particular hammer we have a inverted hammer, which is a shooting star, and now we have a bearish belt hold coming up. So in mid caps, I think one needs to be little bit careful. Let's see how the price action pans out in next coming week. In case if the momentum is stronger on the downside, you might see mid caps coming down and retracing and testing this support level also, right? So overall, if I sum it up for all of you, my friends, market is still range bound, market is choppy. We are in a kangaroo market scenario, which is what I told you. There are only two sectors which are holding up right now. One is banking, one is auto pack. The one more sector which has started performing now, it is metals, but you need to be very careful which particular stock you are picking up in the metals. And all other sectors are currently underperforming. IT is the worst underperformer right now. All right. So I hope this educational video has helped you to understand the underlying state of trend of the market. And let me know by your comments below how my videos are helpful for you or not. And share my work, share my video with other fellow traders. And I'd be happy if my video makes sense to them and if my video helps them to understand where the markets are going, right? Trade less, trade wisely. Thank you.